Hey, everybody from Paris.
Bonjour, oui, oui, definitely sans fromage.
Oh my God. He's got his good French. All right. So today we're going to take a look at our September 2023 market update stats for San Antonio, Texas. Keep watching to see the comparison of the current market with the mortgage crash and mortgage meltdown and Great Recession of 2008.
Hi, this is Real Estate with Alyse and Jay.
And I'm Alyse, and that's Jay. If you're a realtor, we would love to partner with you and help you become a local market expert in your area and earn a six-figure plus income. Our contact information is in the description, so please feel free to reach out to us.
That's right. If you have any questions, please feel free to call, text, or email us.
All right, so let's look at the numbers for September 2023 in San Antonio, Texas, compared to September 2022 in San Antonio, Texas. Our total sales are down by 15%, and we sold 2,744 homes. The average price actually didn't change, and that's at 385 to 10. The median did go down by 2% at 318,950. Interesting number is the close to original list price is at 94%. I think last September it was closer to 100%.
Yeah, well, what we know for sure is that sellers are overpriced by about 6% right now, so they're having to drop to get the house sold, basically.
Yeah. And our days on market are up 52% at 64 days on market. The average price per square foot is at 180, and that's down 3%. Our monthly inventory jumped from last month at 3.9 to 4.3. So that is getting more to a level market. Our average residential rental is at 1812. And hey, Jay, what are mortgage rates doing?
All right, so great question, Alyse. And mortgage interest rates are high. So last year, let's say beginning of January 2023, end of 22, interest rates were sitting at about 6.5%. So right now, as we're talking about this, they're sitting at about 7.5%. So they've gone up a little bit slower than last year, but it's still creeping up. So what we're seeing from all of these numbers is that 70% of San Antonio's market is selling between $200,000 and $500,000. And that's the majority of the market. That's a pretty big majority. Now, the average days on the market for this 70%, though, is about 63 days. But interestingly enough, the higher the price point, the more the days on the market. So you can see 46 days on the market for $200,000 to $250,000 homes. But as you go up, 61 days on the market for $250,000 to $300,000, 67 days from $300,000 to $400,000, and 77 days from $400,000 to $500,000. So really what we're seeing is that the higher the price point, the longer that they're sitting on the market. And those are still relatively fast markets in general, but 77 days on the market is starting to creep up there. So now we're going to talk about existing home sales versus new home sales. And existing home sales are down 15% this same month last year, or versus the same month last year. And the new construction homes, those sales are up 15%. So between those two, that's a 30% swing. But really what that's getting at is, again, just showing that the buyers that need to move, it's much easier to find a new construction home that fits what you need and the timeline versus trying to find that needle in the haystack of existing homes when a lot of those owners are sitting on 3% mortgages and they don't want to sell just yet. All right, Alyse, so give us the big picture for Texas, what it's looking like.
Okay, so we're going to go over the median prices in the major counties in Texas. Start with Dallas, and Dallas County median is 338. Harris County median price is 300, and that is Houston. Travis County median is 500, and that's Austin. And Bexar County, which is San Antonio, is at 300. And the total sales in Texas were 24,922, and that's down a little bit over 14%. Average price in Texas was $423,169, and that was actually up 2%. Our median price in Texas was $341,220, and that was down a little bit over 1%.
Yeah, so you can see it's a little bit of a crazy market. And just to kind of recap and give an idea, Austin, which is Travis County, just a few months ago, I think their average price point was like 580,000, or I'm sorry, their median price per county. So they were close to 600,000, and now they're at 500,000. Houston was sitting around 330,000, and now they're at 300,000. And then San Antonio's adjusted slightly. I think we were at 305 a few months back, and now we're at 300. So pretty steady and pretty stable here as well. And it's also interesting to note that statewide, the average home price is up while the median home price is dropped, as you can see on the graphic there. And we can see this in San Antonio when we look at the price range groupings again. So normally that middle group between 200 and 500,000, currently, like we said, it's about 70%. But normally it's about 60% with 20% below 200,000 and 20% above 500,000. But it's shifted to almost about 20% above 500,000, but only 12% below, which means that's what's kind of kicking up the average price while keeping that median price down. And remember, the median price is the middle home price between 100 different prices. It's the 50th price is the median. The average is the combination of all 100 of those averaged out.
And here's our bold prediction. Thanks again for watching this far. Here's what we see of the current market compared to the market crash/Great Recession of 2008.
First, we're going to go to a chart that shows the number of homes sold in the U.S. And we can see from 2005 to 2008, the units dropped like a rock. And that kind of coincided with the Great Recession, the run up, and then the quick fall down. And that led into the mortgage meltdown and all those things, right? So from 2008, things kind of went flat from 2008 to 2012 in the 4 million homes or units range. And then they stayed in the 5 million range for almost a decade until this year of 2023. So the next chart, we can see home prices over that same period of time. And we can see that prices dropped pretty significantly, around 17% in 2008. That means that if you bought a house for $100,000 in like 2005 or 6 or 7, by 2008, it was only worth $83,000. And that meant that you could only sell your house for a price that was less than you owed the bank. And that meant that a lot of people were in a situation where they were upside down. It's also worth noting that this chart shows 17%, but over that next run, the prices kept dropping until about 2011, and they really didn't bounce back until 2016. So a lot of people were paying on houses that they were upside down on for like 3 to 5 years, and they couldn't really break even on that price point for almost a decade, 8 to 10 years. And what I was going to say is that was just the average, but a lot of people lost 40, 50% of their home value during that time. So that's a big chunk, especially when equity is such a big part of people's game plan and retirement and all that kind of stuff. And that's why we called this the Great Recession. See, our economy had not been hit that hard all at once since 1929, and that was the Great Depression. So every real estate cycle isn't going to be like 2008 or like 1929. Those were exceptions. So we always have to frame that for people, because a lot of people, the last real dip they saw was 2008, so they might expect everyone to be like that. What we're seeing now is, looking at those same charts, is that the number of units sold is going to be about 4.3 million homes this year. And if you can see, that's the lowest number since about that 2008 crash. So the number of units sold is down. But when we look at the home prices, those are up. In 2019, the prices were higher than 2018. And 2019 was an all-time high for home prices. Then in 2020 and 2021, we just like to call that the COVID run-up. And again, those prices were higher than previous years. And each one of those was a new all-time high. And then in the spring of 2022, the market started to shift, and we started to see interest rates come up, and the market started to slow down because of that. And the mortgage rates went from just under 3% to about 5.34% was the average for that year. So even though rates went up, home prices were still a new all-time high in 2022. And so far in 2023, the market has slowed, and based on the number of units sold, that it's slowed down to 2008 levels. But the interest rates, they started the year in January about 6.5% and are currently around 7.5%, as I mentioned earlier. But even with all that going on, we've still seen prices stay around the same as those 2022 levels. And that average for 2022 was $297,000, so just under $300,000. And I don't think we're going to see a new all-time high for 2023, but that also doesn't mean a significant drop either. So ultimately, it's the same story we've been telling, that the market is strong. Prices are still holding steady for sure, because we've got limited inventory, which is keeping supply low, which means that demand is up, and that's what's keeping prices high or even at this point. And as soon as rates start to drop, there's going to be that pent-up demand of buyers that's been waiting for the rates to drop. So as soon as that happens, we'll see the crowd start roaring back in, and that's most likely to push home prices up again, because you'll have those competitive multiple offer situations and those types of things. And what we keep hearing is that rates aren't coming down for 12 to 18 months. So we could be looking at spring, summer of 2025 kind of time frame. And so that's also why we suggest that if you need to buy now, and we're saying need to buy, right? It's not the time to go out and buy extra stuff. But if you need to buy now for work or new job, family sizing, whatever those issues are, even with the rates going up, go ahead and do it. And then in 2025 or whenever those rates drop and everybody's fighting over house prices, and remember, those house prices are going to go slightly up in 2024 most likely, and then again in 2025, now you're in that position where you can just refinance your house into a better rate, because the rates will drop enough to bring out that pent-up demand, right? And if you're buying now, you're also going to be able to get seller concessions and maybe a few dollars off the sales price and all those things. Is that kind of what you're seeing in the market?
Yeah, absolutely. Sellers are giving concessions, and it would be smart, if you need to buy, don't fret, buy it and then refinance refinance whenever the rates go down.
Yeah, and just like we mentioned in that stat earlier, right? A lot of sellers are a little bit overpriced, so they're dropping the price 6%, right? That could save you $5,000 or $8,000 off the price of the house, plus get some concessions. So it really could be a decent time to buy if you think about refinancing in the future.
And if you're a realtor, pay attention to this. Right now is the absolute best time to double down on education and building your database. Most agents, even if they are seasoned, are struggling during the shift that we're having right now. A lot will be exiting the business, unfortunately, during times like this. And what this is doing is setting the stage for the ones of us who choose to stay in the business and keep working. It sets the stage for us to grow our experience and grow our expertise and grow our market share. Think about it. Even in a market where we're selling the fewest amounts of homes since 2008, there's still a ton of opportunity. In our local market here in San Antonio, Texas, we're still selling about 2,500 homes a month. That means there's a buyer side and a seller side. So that's about 5,000 sales a month. And to make a six-figure income, you only need to sell about 2 houses a month. So that's 2 out of 5,000. And a lot of agents are getting out of the business, which means the odds for those of us to stay in are even better. Don't give up. Lock in and start setting a future. In a year, things will get better. And if you start working on them now, in 3 years, you'll be making a solid 6-figure income. And in 5 years, you'll be reaping the rewards as the market starts another secular run.
You want to put yourself in position so next time the market runs, you're riding that wave, not struggling to build your surfboard. So if you'd like to grow your real estate sales, build wealth, and have the life you dreamed of when you first got into real estate, we would love to help you get there. Our contact information is in the description below. So call, email, or text us. And again, thanks for watching. And as we like to say,
Keep Austin weird.
keep San Antonio cool.